Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and TradingView with over 190k reputation points. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical support and demand area. From here, in fact, all this previous rejection to the upside was created. Right now, the market is testing the exact same zone, so there is definitely the possibility for a potential rejection to the upside away from this area. We must also notice how in creating this move to the downside, the market has also printed this monthly M pattern, and in general, after the creation of an M pattern, the natural move would be for the market to create a rejection to the upside, because in this case it is also quite clear that the market is overextended to the downside and in need of a correction, because no market just moves in a straight line. Along the way, every market will create impulses and corrections, and especially if the move to the downside was created with an M pattern, after that, the usual movement of the market is for it to create a rejection to the upside, potentially also completing the M pattern at the neckline, which is the previous support turned resistance, in this case from a monthly standpoint. And we can see examples of M patterns also in the past. We can see, for example, here the market created this M pattern, then created the move to the upside and completed the M pattern at the neckline. We can see another one here. We have a clear M pattern. The market then completed the pattern at the neckline. So it is a quite recurring pattern in the market. And right now we're having another one. So there is a good probability of seeing a potential rejection to the upside away from this support zone. Dropping down on the weekly time frame, what we can notice is that first the market started with a massive impulse to the downside, creating an overextension to the downside in which the bearish momentum was very clear. So sellers were clearly in control of this market, pushing it to the downside aggressively. However, right now, we're starting to see these rejections. Every time that the market creates a move to the downside, immediately it gets rejected to the upside. Now, this means that we're seeing a deceleration. So as the market is decelerating during this move to the downside, there's a good probability at some point that buyers will regain control, or even that the profit taking of the sellers could trigger a deeper correction before then seeing the continuation to the downside. But for that, we need to go and see what institutions are doing. And we will be looking at that in just a few minutes when we move to the commitment of traders. For now, let's keep this in mind and drop down on the daily time frame. Now, from a daily perspective, the situation is quite clear. We currently have a bearish market with bearish structure. The market is still below this previous level of daily support, which is now turned resistance. And until the market will remain below this previous support and resistance, there is a good probability of seeing more bearish continuation being created away from this level. The only way in which this market can continue higher is if it creates a break above this level. Because what we know is that in the market, previous resistance, once it is broken to the upside, becomes support. So if we get a successful break above this resistance, at that point, on the retest of the previous resistance turn support, that is where we have good probabilities of seeing institutions again entering into this market adding longs, and at that point that could further increase the probabilities of a potential rejection to the upside away from this level. Now, if we're going to see what we have when it comes to the commitment of traders, so what hedge funds and the big players in the market are doing, and we look at the data precisely for the JPY, we can see how with the last reports, net positions are still getting increased. We went from having minus 184.2k net positions, so a negative net positioning in which institutions had more shorts than longs, with 220k shorts compared to only 36.7k longs, all the way up to now having a positive net positioning with plus 41.1k net positions, so the complete opposite, more longs than shorts, 7.4k longs compared to only 7.4k longs added with just the last report, compared to 7.7k shorts getting closed, which brings the total positioning at the moment at plus 41k with 91.7k longs compared to only 50k shorts. So essentially institutions went from having more shorts than longs to now more longs than shorts, which is essentially the complete opposite. So it is no surprise that during this period of institutional longing of the JPY, USDJPY has been trending to the downside, because if institutions are longing the JPY and moving to the bullish side of the JPY, USDJPY is supposed to be getting weaker, which is in fact exactly what it has been doing so far. However, we still don't have the new report, which is coming out in just a few days. With the new report, if we start to see that institutions are taking profit in this level, so essentially they're starting to once again close their longs, they don't even need to be shorting, but it's already good if they start closing their longs, so some profit taking. If you're taking profit on a short, you're essentially longing. So at that point, that would increase the probabilities of this correction. Then in the long run, absolutely, the market can continue to the downside, but a potential correction away from here still is possible. So it is very important to see what we will have with the new report. So let's keep this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So from a daily perspective, if the market will break and retest this level, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside away from this level, also potentially completing that monthly M pattern. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that there is, and I have created this with all the effort that I could put into it. Directly, as soon as you open here the page, you will see a complete video presentation of everything included and how the entire program is structured. In it, you will find all my courses, the VIP Telegram signals, plus the video explanation. So essentially directly copied from my trading account. You will have the possibility to have one-on-one private mentoring directly with me included all in the program. The trading station software with the Telegram notifications integration. So a complete tool giving you everything that you need as a trader when it comes to the software that can assist you with your trading. You will also gain access to the COT data software, which is the one that we used in this analysis. And if you continue to scroll down, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the checkout process. So definitely looking forward to seeing you on board. The link is in description, and I will see you on your student dashboard. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.